Well, good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and it's you would have to say a mixed day of trade, but the week ahead seems to be pretty important one, considering it's also the expiry week. But first, let's set up the world markets for you. So Friday was you would argue an iffy day for the Nasdaq, but if you look at the intraday of the Nasdaq, which is the blue line, it will show you a thing or two, right? That it had started off weak, it looked wobbly, and did look like Monday morning will be terrible cues from the US markets perspective. But I think the Nasdaq climbed its way back into the green. By the way, while this is showing green, Dow and the S&P still ended in the red, and futures as of now are pointing towards a very mixed start. So we don't have the perfect cues from a bull's perspective. And I would reckon that during the course of the week, while not too many central bank activities going to take place, there's only Swiss National Bank which is going to have its meet. And Jerome Powell testifies twice before the Congress, but I don't know what else can he say. Yields will probably take center stage. There's some auction in the US as well, which is fairly large. But after moving above that 1.7 mark last week and reaching almost 1.75, one can very safely say that yields remain center stage when it comes to the US markets and arguably the world markets. This is 1.7 for the first time in more than a year last week, and in fact hit a high of 1.75. So this remains top draw from for all perspective. Now you may argue that in the long term this may not matter as much. This will eventually cool off, but for short term it is mattering. Asia hasn't had the best of starts. ASX may have been in the green, but Japan, Kospi, Straits Times, almost everything is looking slightly wobbly to mixed bag. The Morgan Stanley Asia Pacific EM Index, Asia Pacific Index, is trending a flat line. So we don't have too many negative cues as well, but for Japan, which has really started off weak, but a lot of other markets also have looked slightly wobbly. So remains to be seen if any kind of uptick that is there in these markets lasts or doesn't last. The SGX Nifty will come up on your screen next, and that points again towards a flatline start. So we don't have, like I said, too many great cues or too many negative cues as well. And therefore, you have to admit that what will happen in the markets during the course of the day is that news will drive what the market does, not the start really. And rising COVID cases may be a temporary worry. And Mumbai, Maharashtra are at the peak really. Mumbai had some 4,000 cases, 3,775 to be precise. So it's a cause of worry. It may be a temporary worry, but it is a worry nevertheless. So you have to keep in mind that. Now, the relative performance of FMCG versus real estate last week shows the market's bent for sure. And the bent of the market seems to be that let's move towards defensives, because real estate crashed last week and FMCG was up about 2.4% last week. The only point is that if you just look at purely from a trading perspective, the shorts in the system, the volatility index, and the fact that it's expiry week, tactically, you might be looking at select contra trades like to do really well versus a naked short or a naked long. So you have to keep that at the back of your mind. Let's wait and watch how this shapes up during the course of the week. But something tells me that from these levels, the deck is getting set up for maybe a bit of a contra trade. Flows selectively could have been positive last week, but that was also on account of Friday's session. I'm talking about particularly Friday, wherein the FTSE rebalancing led to some bit of buying that came into select stocks in the Indian markets. And frankly, that is what a lot of Vanguard buying was like. So if you look at Vanguard buying some 10, 12 names in a lot of publications, it was because of passive rebalancing and not because of active interest in the Indian markets. Keep in mind. Just one more thing. I think if you look at what's happening in the primary markets, there's massive subscription for select names, and Nazara is yet another example. 2021 second most subscribed issue, where in the HNI category was subscribed 400 times, institutional 100 times, retail 75 times, overall 175 times. And this follows the fairly successful offerings from both Anupam Rasayan, which was exorbitantly priced, and Lakshmi Organic in particular, which was subscribed very heavily. So the primary market activity certainly pulled out a fair degree of liquidity. That is behind us now. I don't think there are too many IPOs left to be subscribed, and therefore that's maybe a small glimmer of hope for the secondary markets. What are the stocks to watch therefore in such a scenario? I think I'll watch out for 3 or 4 names. Nothing too big bang, to be honest, today. But NMDC remains firmly in focus. Over the weekend, they have hiked iron ore prices. and they revised the prices of fines by about 100 rupees per ton and lumps by 250 rupees per ton. And the reasons, of course, for the hike is private mines have hiked prices in Odisha, and the demand is firm. Global prices are moving higher. And remember, this comes on the back of NMDC reducing prices in February 2021. So a bit of a reversal of sorts from NMDC side, and this should augur well for the stock. Bharat Dynamics is another one. This has been in news of late for getting a number of contracts. They've signed one more for production and supply of Milan 2T anti-tank guided missiles valued at close to 1,200 crores. And this should augur well. So maybe you would have Bharat Dynamics react positively in the session today. Maybe JSW Energy as well. They've signed some solar, setting up 1,200 megawatts wind power projects, and therefore that could be active. I would watch out for Voltas as well. The company said, of course, that they expect double-digit growth, and HSBC's come out with an upgrade. They've trimmed the target price marginally because by 1 to 4% essentially on increased commodity costs and therefore margin pressures that Voltas may face. But they have a high degree of confidence on the company's growth outlook, as the report says, and they believe that Voltas is the best way to play the long-term structural high-growth Indian room air conditioner industry. So therefore, Voltas could be in focus, not just because of the HSBC upgrade. Frankly, HSBC upgrade may not really warrant as much reaction or get as much reaction, but because the company itself is saying that they believe double-digit growth is certainly possible, and the summer might look very, very strong. There is also this note that Jefferies has put out on the scrappage policy. Multiple brokerages have done this. I thought Jefferies was pertinent, so I'm reading it out. They're saying that while the scrappage policy has the right intent, they believe that the incentives are insufficient to trigger much replacement. And a vehicle owner can usually get a scrap value of 2-3% of the vehicle price in the market. They believe that the OEMs will not offer additional discounts at a time when demand is already recovering. And of course, the margin pressures. Who doesn't cite that these days? So that's the long and short of it. I think everybody said this, that the intent is right. The move is not bad, but it doesn't really trigger a massive reaction on the stocks. So do watch out for autos. Nevertheless, don't get caught in the narrative that those scrappage policy is out and therefore it will be beneficial. A lot of people say it will not be tremendously beneficial. And then there are a few stocks which on both price and volume action have warrant and attention. So Quest Corp gained about 5.5% in Friday's session, with delivery percentages of about 40%. So did M&M Financial Services, 35% mark for delivery, 6.4%. GMDC, 6% gain, 33% mark for delivery. And IDBI Bank made a bit of a comeback. Banking wasn't the strongest suit on Friday, but IDBI Bank had a decent outing. So that's one more piece that you got to watch out for. Last but not the least, I just want to offer, all of you should know about this, and that's why I'm bringing it to you. And I urge you to log on to our website and try and read this story by my colleague, Ira Duggal. Over the weekend, there was a lot of talk about how there are negative yields in India, and oh my God, is it a bad thing? Or what kind of scenario does it paint? But as Ira found out, or Ira's team found out, that it was not negative yields, it was a fat finger syndrome. So should you want to know more about this, it was a big talking point in the bond markets. Try and read this story on our BloombergQuint website. But essentially, flatline start anticipated at the start. Don't expect too much from the index. Stock specific, do watch out for real estate. Could there be a bit of a bounce? Maybe. Could there be a bit of a bounce for some of the other indices? Maybe. Is this a good time to create some contra longs? I think the quant indicators are indicating that. So lots to monitor. Not too much of central bank action, thankfully. Watch out for the yields. The 10-year yield in the US could well be the driving force for what world equity markets do. Thanks so much for tuning into the Trade Setup. Have a profitable day ahead.